had some other things I had to get on with in London. What did I miss? Tell me what I missed.
Well, I mean, so most of the conference focused on human rights. So it's not a Bitcoin thing; it's mainly a human rights thing. But they're increasingly recognizing Bitcoin as a tool that can be used just like any other tool. So, for example, VPNs can be used if you want to, receive and transmit information in a hostile network environment, and Bitcoin can be used to, receive and transmit value in a hostile financial environment. And so they've been increasingly using that, especially Alex Gladstein. And so they had a number of panels there where they're interviewing people from Africa, from Venezuela, from a bunch of regions around the world where they've had their bank accounts frozen, they've had high inflation, and just how people are using that as a tool. And then they also had panels on basically on lightning and energy to discuss, some of the other aspects that maybe not directly tie into human rights, but that are, involved in either scaling it to people or about the costs of, having this technology exist.
And did it have a profound impact on you going and seeing and hearing these talks?
I think so. Yeah. I mean, especially when you compare it to the World Economic Forum that was going on, that's where a lot of the altcoiners are going. The Bitcoin and stablecoin people were kind of at the Oslo Forum, and basically it's like one is like real world tools and things like that. And one's more about kind of Wall Street like, right? So it's utility versus more investing and speculation. So I think that's the most important angle of the whole thing. That's kind of going back to the roots of why Satoshi made this whole thing.
Mm-hmm.
He didn't talk about, hey guys, we're all gonna get rich. He's like, here's like this private peer-to-peer type of money, right? And so this goes back to those roots.
So a big shout out to Alex Gladstein for everything he's done there. I know you're a massive fan of the Human Rights Foundation. I've always found it's a really good grounding exercise because, I mean, we're about to talk about the macroeconomic environment, and I know that's a lot of your work is focused on that side of things, and we discuss price, and when Bitcoin's going up, everyone's happy, and when it's going down, people aren't so happy. But there is this whole other utility side where you realize this is an essential tool for people outside of whatever the price of Bitcoin is.
Yeah, at the end of the day, what we're watching is this network monetizing over time. And if you look at the Chainalysis Crypto Adoption Index, it's Bitcoin, but it's all it's stable coins, it's all of crypto. 19 out of their top 20 countries are developing countries, and the one outlier is the United States because we're weird. But so it's basically it's not surprising that places where you either have arbitrary bank freezes or persistent inflation problems, they're more likely to use these alternative monies and these peer-to-peer cryptographic monies. And it's one of those things. Some of them use Bitcoin, some of them use stable coins, but then there's also a lot of scams in the whole space too. So it's why education is still important. But basically, it's this goes back to the roots of why this technology was invented in the first place.
Yeah, and it's quite interesting that you said Bitcoin and stablecoins. This is something Alex talks about a lot. He talks about the fact that in certain jurisdictions, stablecoins are super important when people are struggling with economic difficulty. Bitcoin isn't always the greatest tool for them because the price is volatile. So in certain jurisdictions, I think he's mentioned Palestine to me specifically, maybe even Turkey recently. He said there's a lot of popularity with regards to stablecoins. For me, it gets into this kind of weird place whereby I'm a Bitcoiner, but I absolutely support and agree with everything Alex says about stablecoins. But then I have to square this circle around the protocols which they tend to live on, which tends to be shitcoin protocols, which we can all be very critical of. You've done some great studies on Ethereum and potential issues with scaling that as a platform. But at the same time, if that is a tool that is becoming a tool for human rights and freedom, I'm kind of conflicted between criticizing these platforms and saying shitcoin all the time when recognizing they are actually helping people. Do you understand the conflict I have?
Yeah, I mean, at the end of the day, there are people making use of stablecoins, right? So one of the big markets is just crypto trading, right? So that's where a lot of the Ethereum ones are used. The ones that go on Tron are optimizing for lower fees, and they're the ones that a lot of people in developing countries are actually using as dollars. They're using them for savings, things like that. Now, as you point out, there's a lot of problems with the underlying foundation that they're on. But the whole point of a stable coin is so Bitcoin's the most decentralized. It's the one that's globally decentralized. Whereas what a stable coin is basically doing is saying, okay, so it's centralized, but the central hub is outside of the country that is confiscating your dollars and is having a currency crisis. And so if you're, say, Nigerian, and you hold tethers or something like that, they would, perceive that as safer than if they, try to store dollars in the local bank. There's a precedent of countries like Lebanon and Argentina. When they have currency crises, they say, oh, you have dollars in the bank. We're going to go ahead and convert them to local currency at the exchange rate we pick. And so any attempts to protect yourself from that inflation just fails. And so they'd rather have this kind of peer-to-peer version with the central hub outside of the country. Now, of course, they have to rely on that hub. They have to rely on that protocol. And so it's not an ideal long-term solution, but it's obviously an important bridging tool for the environment that we're in right now, because a lot of people, they just, if you make $400 a month and you have $400 expenses a month, you can't risk volatility for that, right? And especially if you're trying to save for a 3-month, 6-month, 12-month period, being 100% in Bitcoin is challenging. And that's where stablecoins can be useful for them. And so it's serving a purpose. And then there's all sorts of technologies like Taro and things like that that could eventually bring them back to Bitcoin and Lightning. I mean, they originated on Bitcoin.
Mm-hmm.
They moved out to where, just market activity made it cheaper. Maybe they'll come back. So we'll see what happens over time.
Yeah, it's fascinating that Tron has become this technology that's been super useful for people in these jurisdictions.